Good morning, traders. It's 8:01 a.m. Chicago time on the 25th of April 2016. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. The main things I want to cover today, it is a Monday, so we'll go over what the week is looking like. It's important to note that overnight, China, the Financial Times came out with an article stating that China's debt total climbed to 237% of GDP, 237% of GDP in the first quarter, an all-time high. That is not a good sign. In addition to that, the German business climate slowed. The German IFO business climate survey unexpectedly fell in April. The reading slipped to 106.6 from March's 106.7. In addition to that, you have Japan taking a bit of a hit on the earthquake damage. There's just a fair amount of what seems like bullish news coming out overnight. So we need to just consider that overall the indices across Europe are down. The DAX is down 60 points. The Euro stocks are down 19 points or 0.62%. U.S. dollar index is down. The S&P 500 down 4.5 points. The NQ is down 9. The Treasury bond is down 8 ticks. E-mini Dow is down 33 points. Mini Russell is down 2.2 points. And the Bund is down 0.19. The 10-year note's unchanged. Euro FX is slightly up. The yen is slightly up. Crude oil is just slightly up. And gold is up the most in the group, but it's only up about 0.5%. So it looks like the overall sentiment as we stand right now is a flight to safety type sentiment. I'll show you a DAX chart in a minute, and you'll see that the response overall to the expected news, especially the news out of China, has been fairly negative. It's recovered a little bit, but things are not looking so great. Given that it's a Monday, we'll take a quick look at what we're expecting today. Today, we're getting new home sales at 9 Central, 10 Eastern, expecting 520,000. Then we have the Dallas Fed expecting -10 at 9:30 Central, 10:30 Eastern. And then other than that, it's fairly clear. The calendar is fairly clear. Not seeing any major earnings after the market. Pre-market, we had Phillips. But for the rest of the week, as we look at the weekly, there's a fair amount going on the calendar. Tomorrow, durable goods, Case-Shiller, PMI, and consumer confidence. Wednesday, we're getting German JFK consumer confidence, European money supply, UK GDP index of services, and then Wednesday is a key day. We get the US rate decision in addition to new home sales. Thursday, German unemployment, CPI, US PCE, and GDP. We have ECB's Nowotny and Costa speaking. On Friday, looks like, okay, that's incorrect. On Friday, it looks like we have personal. I just noticed an error here on the calendar. Friday, we've got personal income, PCE core in the U.S., employment costs, also personal spending, ISM Milwaukee, and a Chicago PMI on Friday, as well as University of Michigan confidence final on Friday. Wednesday and Friday appear to hold the most weight this week. Those are the days to keep an eye on. Let's switch gears here and look at what we have as far as the technical charts are showing. We'll start off with a review of what was expected based on Friday's Trader Bite. Friday's Trader Bite we went through in some detail. This doesn't look like 1080 to me. Let's see. Friday's trader bite, the expectation was for the market to chop around on the open. We expected an open auction in range by the time the trader bite was taking place, and then the expectation is for it to drop down to this micro composite point of control right down here, and then expected to bounce back up into the 70.85 area above, and then for it to get back into balance with the Thursday's range. Okay, remember Thursday we didn't do a trader bite, but Friday that's what was expected. We drop out of range, go down to 75.50, rotate back up towards 20.85. The second hypothesis. Let's clean this up here. The second hypothesis was for a test higher early, and then the expectation is for a push down to 75.50, and then expected the day to kind of quiet down and go slow into the lower range of Thursday into the 82-83 area. This is what actually happened on Friday. It played out the it played out hypo one almost completely. The push up into the 89 was higher than expected, but overall we rotated down, went right to 75.50. We pushed to 75 even. You can see on the low 75 even. Pulls back to the open, and then rotates for a higher low, and then gets into a corrective push. This push here had a fair amount of volume in it for that time of day. For us to be trading this kind of volume between 12 and 12:30 Central is unusual. And then here we are back at 85, so it's almost exactly as what was expected on Hypo 1 on Friday. It was a pretty interesting. This push down here was fairly tradable in my opinion, and then from here the noise, the expectation is it would try to climb back up into Thursday's range, and it did. It was difficult to find a spot to get in on this until we got through the mid, and then we pull back to the mid here, and then it gave us a small push up about 5 points worth. Something to note about Friday: the point of control on Thursday, right down here at 85 and a quarter. This is the monthly high. This is the monthly high of December. And then here it is on Friday. The point of control completely in line with Thursday's. Complete balance here. You can see that the point of control, this white line, shifted from up here down to this high volume node here, and then on the close it shifted back up and was completely in line with Friday. This portends this type of value movement, this type of test and return is likely to give us a run up from here. This is a bullish bullish participation of market, essentially tested below and found interested buyers against the old MC point of control. I'll show you where that point of control comes from. There it is. So we moved, essentially what we did was we moved from this middle, let's get rid of these. We moved, actually we don't need this profile here. We moved from this middle high volume node, and we shifted down and tested the point of control, and we came right back up to the middle of the high volume node, and now that puts us in for a test of the low volume node above. So 2089 is expected to be tagged here, and then it's likely to test the higher high volume node, which is in line with the monthly high right here at 2093 and a quarter. 2093 and a quarter is the next test up if it continues to hold the 75.50. Now, if the market decides to, for the reasons discussed earlier, there's a fair amount of negative news out there. fundamental news on China. If the market decides to get back down to 75.50 and push through, then the expectation is it's likely to push down into the next area down, chop around, come back to 75.50, and then start attacking this gap zone that still remains here from the 13th. That's the secondary expectation. But overall, this morning, the expected play is for it to open in range. So we expect an open auction in range. Let's thicken up this pen a little bit here. Expecting an open auction in range, and then I'm expecting it to make an attempt lower and then continue to start to push higher into that 89 is the expected test. So that'll be hypo 1. If I can draw this morning, that would be hypo 1. Hypo 2 is responsive buying towards that 85.75, and then rejection, chop in the middle, and then it starts to break into through 75, chop around, pull back to 75.50, and start moving towards the gap zone. That would be hypo 2. Hypo 2 is the better play, has more opportunity on a day trading, from a day trading point of view on futures. I'm more hoping that we'd see hypo 2 than hypo 1. But overall, the market is supporting a strong continuation here. If you can look at this monthly, from the beginning of April, we participated down here for a fair amount of time in the 2040 point of control area, and we have shifted all the way through, got through the 2076 area, pushed through the 2086 or 85 area, and have made new highs on the month. And here we are, we're currently trading in here somewhere. So there's a fairly nice base beneath us to keep prices, price discovery higher on the longer time frame. So on the monthly time frame, if we look at the weekly, we see that the weekly is showing a little bit of weakness, but overall it is coming from strength as well. It is okay. My cat's getting in on the action here. So we have a base, a gap, and then the market shows a fair amount of strength here 2 weeks ago, and then what it does is it opens below and shows an unfair low down into that 2065 area, shows an unfair low and starts to walk itself up all the way to new highs last week. Another sign of strength. We continue to one time frame up. Here we have higher lows, higher lows, higher lows, all the way through. We're enjoying these higher lows on a one-time framing basis. It has gotten ahead of itself here last week. You can see that we've really extended on a 2-week basis. We've really extended the range. This week is expected to slow down a little bit. With the Fed coming in on Wednesday, the expectation is we will likely test higher, but the expectation is we'll start to close this gap, to move to close this gap down below us, and to build a base later this week. But initially, the expectation is we're likely to push into this 2093 area at some point, test that out, and then rotate down. I do not expect new highs this week unless the Fed does something unusual. That's how things are looking as of this moment. Of course, all of this can change based on the price action. It's just the nature of the business that we're in. And then the last thing I wanted to share with you here, it's 8:15, so it's my time is up. The last thing I wanted to share with you here, just a quick word of wisdom. It is really important to be consistent. Consistency is the base from which you become a professional trader or a professional anything. And consistency involves you discovering or creating a routine and sticking by it, even when every bone in your body wants to break that routine and do something different. You need to come in and do something consistently every day. Consistency is the core of creating habits. So a routine, a process done over time with consistency becomes a habit. So you'll end up with, coming in and feeling no resistance to seeing your cue to do something, whether it's a time cue or some sort of habit that you have coming into trading. Then you follow your routine through your preparation, through your trading day, through your process, and then the reward in the end of it is that you did follow. It's another day that you get to book as a professional trader doing something consistently. So the difference between those who dabble and those who become professional at anything whatsoever is really consistency. You just have to stick to whatever plan you decide to put together. If you don't have one, you really should create a routine. And for this, I do have at the bottom of this YouTube link, if you go to the YouTube channel for this particular video and every video for the last couple of weeks, there's a link to a Big Mike webinar. Let me see. It is right down here. If you open this up, this no-nonsense approach from plan to execution, click on this link, check this out. I go over the routine. I'm bringing it up because I get questions from folks who are not really doing anything consistently, but are frustrated by the lack of consistency in their in the outcomes. And it's one thing after another. It is focusing on the process, the journey, which includes your consistency, setting goals on Sunday for Friday, tracking those goals, reviewing what happened, setting new, more realistic goals, tracking those goals, coming in, day out, doing this on a very routine and very, very consistent basis. Without that, it is a difficult path and it's a fairly random path, and it's just emotionally unsustainable in my opinion. I've been through it. I've been fallen out of consistency and back into consistency. I know what it's like, and I'm giving you the best advice that I can. Check out that webinar if you can, and go after consistency as opposed to money. Be immersed in the journey as opposed to the outcome. Good luck.